And joining us now to talk about Monday's market trade action. Again, a rough day to start the month of August with the soy complex seeing a lot of liquidation. We're joined by our good friend John Heinberg with Total Farm Marketing. John, great to have you back on the show, sir. How are you?
Doing well. I'm doing well.
Appreciate the time and jumping right in, looking at Monday's market action. Rough way to come back for the month of August. We thought that hot, dry forecast was going to be the big driver here, but a lot of other news items, it feels like, have kind of combined to give us a downtrend in the markets on Monday, led by that soy complex. It just feels like a combination of a lot of different things out there, John, isn't it?
Very much so. Again, we watch those weather models and they continue to keep the dryness in the forecast and maybe a little bit of moisture in the eastern belt and a little potential for some moisture coming maybe on Wednesday. So we'll have to watch if that materializes. Still going to be pretty scattered, at least kind of like the stuff we saw last night. Then we throw in what's going on in the edible oil market with palm oil, the big drop in crude oil down $5 a barrel again today. And obviously the geopolitical things with Speaker of the House Pelosi possibly visiting Taiwan and those geopolitical tensions, and throwing some bad economic data from Europe as well as China. And you just had yourself set up for a pretty rough day today, especially in that energy market and those grain markets.
Let's talk about the China aspect of this, because I think that is probably the overriding thing that sent the funds to the selling today. Obviously, the economic news, worries out of China, worries about demand, the geopolitical situation with Pelosi going to Taiwan. As you look at things, demand-wise, demand hasn't been super strong the last few weeks, although we have, for the most part, we've sent out a lot of soybeans already, but and we don't want to lose sight of that. But just looking at everything, there is considerable worry out there about Chinese demand, I think, moving forward, John.
That's still just going to be the big old wet blanket over top of everything is what is happening on that standpoint, here, especially for the old crop side in terms of finishing out the marketing year with the last month ago here. Do we get those shipments out? Do we roll some more over? Do we see more cancellations? Export inspections today were pretty solid, 500,000 tons on beans. So kind of a number we kind of still need to see. But again, that is going to be a concerning point here is where we are on the demand. We know those new crop sales are the best basically since 2012. This is a window. We've seen the Chinese become a little bit more active, again, trying to secure both U.S. and Brazilian supplies. We've got the discount in the market to those other beans globally. So that kind of keeps the door open here. So, that'll be something we'll really be watching. What happens with these export sales numbers? Can we get the rest of these beans shipped? We'll obviously see some more cancellations, some more rollover that could add to the carryout projections. But it's still going to be a tight supply picture. We don't have anything dramatic happening here that's going to also add tons of beans to the pile. So again, that after we maybe get through some of the political issues that we're kind of dealing with here, this market might focus back in. We rallied solidly last week, $2 plus, and 70 cents doing it in one day is kind of brutal. Or 60 plus cents on the close. But this felt like a very corrective type day. Now let's see what the crop ratings do this afternoon. Let's see if we continue to see those decline, even though seasonally we typically do go down in this window. But those forecasts are still out there. So, I still think it's just a volatile market with a lot of pieces moving and between meal and oil, as well as what's going on in terms of those markets. It's just going to really keep this bean market dancing.
Well, and obviously, we saw, as you mentioned, a huge rally last week in the soy complex. Meal was up a lot. Oil had its days. You look at things now, and obviously the weather component is still out there. This hot, dry forecast for the Western Corn Belt, that's going to be a fundamental driver if you start taking away some of the outside market factors. If we continue to stay hot and dry for much of the first part of August here through key pod fill time for beans, one has to wonder what this market could look like here 2 weeks, 3 weeks down the road, John.
Again, it gives us some potential. And, beans are always made in August, seems to be the mentality. But sometimes the bean market doesn't quite react to the weather unless there's really something truly definite going on that we're seeing some type of issues. If we come back and we pick up some rainfall the second half of August or going into September, we've seen that before too. We've had decent finishing weather. We just add pounds onto that bean crop. So there's just still a little bit more time probably yet in this soybean market. at this time frame. Now, with that being said, that was a heck of a turn last week. And even the pullback today, we held $14 on November beans. So that was a little encouraging to see. Like I said, now we'll see if the ratings and things come to play. The managed money kind of moved themselves to the sidelines, holding onto their, fairly small long position since the last couple of years. So again, they've got some room to push this thing back up if they get the right news. So we'll have to see. But again, just a lot of pieces moving around out there. And it just felt like today, because of the 1st of August, got that USDA report coming up here next week. We probably won't see any major changes other than acreage because of the resurvey. That this market just felt today that, maybe we put a little too much on the bone last week and we needed to take a little bit off.
How about in corn and wheat? Obviously feeling some of that spillover pressure from the soy complex, but I think in hindsight overall on Monday, only down 9 to 10 on the close in corn. Wheat futures ended up being down, 6, 7, 8, 9 cents, 10 cents. I mean, for the most part, pretty decent day Monday in corn and wheat, despite the heavy pressure in beans.
Yeah, they hung in there pretty well. We held December corn around that $6 handle pretty much most of the day. We poked under it a little bit. You could just see some buyers step in there as well. In that wheat market too, even with the headlines and getting some actual movement of some grain out of the Ukraine, even though, again, it's very small on the global scale, but just the fact some grain is moving just added some selling pressure in. So we'll have to see how that plays out. Again, to me, it's still just going to be kind of more of the headlines now out there, and we're past that point, and the market will just adjust. For me, it was still kind of watching what was going on in those outside markets, probably tied a little bit more to the corn and wheat markets today, and just some of the selling pressure in grains in general. Again, we'll still continue to watch. We're kind of past that weather point in the terms of the calendar where the weather really makes an influence on the corn market. We got a little rich last week, saw some selling kick in. And right now, maybe we're just going to start building ourselves a bit of a sideways pattern. That wheat market there, that one, we just got a lot of pieces moving. Somebody's cranking wheat out somewhere globally. We'll need to see what happens with that. Again, do we continue to drive some business here with these lower prices? That'll be a big factor. Was kind of encouraging to see the dollar kind of break a little bit again today. Still very elevated, but obviously trending the right way now a little bit. That could help out this commodity space. So a little encouraged again by the strength at the end of the day. Now we'll see what those crop ratings do. We'll see the progress on the harvest, where those things are. And that, if we can get a little bit boost back up into the upper end of this thing, holding $6 a day was a pretty big key.
Well, and you mentioned holding some ranges and maybe looking at a sideways range. I want to talk about that, maybe make a case for that. You mentioned November beans. We held that support around $14. Cords hold it around 6. Wheat, 8.50, $9 on spring wheat. Do you feel like those are potential spots where we're going to have support for a decent amount of time? Would that be a floor? But would these be floors potentially to lock in at these levels if we think, we have a lot of upside potential still possibly out there, John?
These are spots that can possibly hold. I mean, obviously there's some chart characteristics underneath, especially in that corn market. We got a gap underneath us here that, looks like an area that maybe we go target. And if crop ratings don't move a whole lot tonight, it wouldn't shock me that we get some more selling pressure into that, or if crude oil continues its fall. It looks like it's ready to go back and test that 90 handle before it maybe gets range bound. So that's another $6 down from here. That'll make it difficult for the grain sector in general too. So those things are still concerning. I think it's an area though we can gravitate back to again, as long as we don't go in and put fresh new lows in here, that this market's maybe got a little bit of a short-term bottom. Now with that, we don't typically put July lows in. So that does leave me a little cautious going out into the end of the September window. We'll see what we start getting for the, on the USDA numbers. We'll see some of that demand. How much do we lose here in terms of the export side going into the next marketing year and gets rolled over? What's that do to the carryout? So those things are all still going to be coming into play as we move into September. So I would use this window here, kind of like you said, there's $6. Maybe we find a way to defend that somehow. If we get a little lift up, make sure you're building some puts. Don't forget that insurance guarantee is still $5.90 underneath. So there is some downside into that as well. That maybe we got ourselves one more chance to get down to a fall low. But at the same time, I still think there's a good chance, though, when we get these combines rolling later on this year, we might start to see some more of the ramifications of this weather, and that prices could be firmer for us at harvest or later. So that's going to be a spot if we go test that low that producers want to get some reownership back over top. Some of those bushels that maybe they felt like they didn't get priced where they wanted them to be.
John, let's talk a little bit about basis as well. Whether we're talking corn, beans, you name it, basis has held fairly strong even throughout all of these market moves on the futures trade. As you look at basis, I mean, I've heard some stories, some guys, trying to push some basis numbers a little bit and getting some, dollar 50, $2, even $3 over in some spots in rare cases. But you look at basis, let's talk this cash market a little bit. What stands out to you as part of why we've held, and what would be some thoughts for producers here?
It's also something that we need to be cautious of in this window because, right now there's still some good demand, at least on the domestic side of things. Ethanol margins are there. And on the soybean side, obviously the crush margin is there. So those end users in the soybean market, they're willing to pay up regardless of the price if they're turning profits. And with the move in soybean meal and the strength overall in oil, there's still some good meat on the bone there for them. So that's one of the things that does stay supportive, again, but we're still in a window here where producers are still sitting on some old crop supplies. If they still have them, still making a decision whether they want to pull the trigger or not. If we get a little further down the road, there always hits that window where all of a sudden the end users say, hey, we're good. We get through to the new crop. And you see that basis start rolling over. So be cautious of that because that's going to be that next indicator that probably sends us to a new low. Or we get to that window where the producer says, all right, I need to get some room cleaned out here. Let's get these bushels moving and get them on the marketplace. So there's always that concern. We kind of see that sometimes usually around that 1st of September, late August window that we kind of start seeing that cash market fall apart as we just move past the old crop. And now we start focusing on what's going to be coming in terms of those new crop bushels.
Let's move over to livestock, John. Not a bad day today in cattle. As expected, I think that feeder corn relationship, of course, still kind of showing itself there. Live cattle as well at the close. Decent day there today. Hogs were a little more mixed. Some of the deferreds had some green numbers, but overall, protein sector, maybe start with the cattle side. What are your thoughts there as we get into the month of August?
Yeah, we still got some pretty good support in that cattle market, especially on the retail demand side of it. And that's just one of the things that's been a little bit surprising is the fact that consumers kind of hanging in there, even despite the recessionary fears. Now, it just doesn't feel like the market wants to go anywhere aggressively here because of that factor. Does that consumer shut off? Cash trade was softer last week, again, on 35, 36. We'll see what we get this week as the week develops. So that August contract's probably getting fairly well priced, at least in terms of where we are compared to cash markets. So we got to see where October is. Do we start getting those cattle numbers down? That's going to be the biggest focus, I think. Do we get some price lift there? So see some pretty good value right now, at least in that October contract. Probably a spot just because of the typical seasonal window. Normally we kind of peak out here around the 1st August and maybe get some softening. That maybe that October price might be a spot we want to make sure we get a floor underneath just in case we get some pullback, especially with the geopolitical concerns. And, China's become a major buyer on the beef side as well as the pork side here. Seeing that market tighten up on for us would be not very good overall in terms of price. So I like where we're at. I still think the cattle numbers are still dictating that we can stay firm in here, but just staying a little bit cautious at least. Maybe as we get through the next month or so. Feeder market, that looks strong. I mean, we saw that pullback in the corn market today, triple-digit move in those feeders. Feeders had a chance on Friday to kind of fall apart, and the sellers seemed to get kind of pushed to the sidelines as the buyers rejected those lows. And we got good follow-through today, again, led by the turn in the corn price. So right now, those feeder markets are looking strong again, especially with the fact that the numbers aren't there. Those cattle slaughter numbers continue to stay heavy. And that's just going to keep this cattle supply tight, especially as we move well into the next calf crop in 2023. And you can see that value already on the board with April cattle pushing 155 and plus today.
Good point to make. I think that with some of that tightening in cattle, even with some of the geopolitical factors, there's still plenty of upside potential to watch here. Hogs, a little bit of a break on Monday. That August contract, though, I think it maybe needed a bit of a breather, even though it was a little bit. That thing has been on fire here as we've gone through the last couple of weeks. Got a couple more weeks left in it, John. As you look at this hog market, what stands out to you? Obviously, huge discount the October contract has to August right now.
Yeah, that's something I'm kind of scratching my head on right now. I'm trying to figure out what this market wants to do after this August contract comes off the books here. And, we're seeing a cash market as well as a retail market that is still extremely strong. You look at the cash index today, up another 84 cents to 121, now running at a premium over that August contract. So that'll keep the buyers in play, at least in terms of those August futures. Those direct hog markets in the morning continue to show good strength. They'll throw some of the hot weather in there. That causes the packer to maybe bid up a little bit. Do we see the carcass weights hold in if the weather does become a factor? Keeping that product moving. And like I said, the retail demand side is still there. I mean, you're looking at a decent value on pork carcasses, at the same value we were at last year about this time. So that keeps this market at least a little bit supported. But boy, you look at that gap, and now we're talking $23 from August to October. That's just a big jump, with especially a 2-month spread. And now pushing today towards a contract high on that spread. Now the prices did fade off it today, so maybe that's the second time in a row now we've kind of poked up around 23 and we've seen some tightening. So either that October contract is undervalued, needs to come up, or this cash market needs to start winding down a little bit here. But at least at this time frame, it doesn't seem like it wants to do that. Again, those deferred contracts, these some strength out there overall. That's going to, just like the cattle market, tied to tighter numbers. And that's still going to be something I think is going to keep this market supported. But I'm really still looking at that difference between the August contract and those next couple of months, and just starting to feel like somebody here needs to get moving one way or another.
John, how about this dairy market? Let's get caught up there. Are we finding some support? We seeing more volatility? What are your thoughts in dairy?
Oh, we're finally getting a little footing around the $20 handle, but it's still kind of a little fleeting to me. I mean, obviously we're seeing some production tighten up in this window here. But that cheese price continues to soften. We did pop a little bit on Friday, got a little recovery at the end of the week, giving half that back or so today on the block price. We got blocks at 184, barrels at 180 and 188. Price is still around $2 on, or excuse me, $20 on the milk. Still looks like there's some room to go. If we break through this $20 barrier, now we've been consolidating at it here for basically about 2 weeks. Kind of makes me a little nervous that there's some more downside potential in there. So, producers probably want to make sure you're protecting that spot frame, at least in the next couple of months here, just, holding on to good value, because again, these markets are in that chart is in a bit of a downturn. And if the demand is not there, that's really what it's about, is the demand is actually, slowed down, even with the tighter production, that we're getting some cheese supplies built up. Food service demand has also been disappointing in here. Just kind of shows you that maybe there's some things going on in the retail side that could continue to weigh on prices. So again, holding makes me feel optimistic that we got a price level we did hold, but right now, to me, it's still looking very, very cautious, and like we're still on a bit of a slippery slope if these prices were to break.
Well, John, great stuff as always. I know we touched on crude oil a little bit. Outside markets relatively quiet here. We've had a lot of economic news the last couple of weeks. But as you take a stock of everything, what are your thoughts here as we get into the month of August? Anything else you want to mention or reiterate for our listeners today?
Keep an eye on that equity market and that crude oil market. Typically, August, September are not very good months for equity markets. So do we have that historical downside possibility in front of us? So that could be there. Obviously, we're going to be watching every bit of economic data that's coming out. Are we in a recession or not? That's the big argument going on at this time frame. What happens with the job market? You're starting to hear a little bit more about some layoffs out there. Does that, at this time frame, strong job market, according to the Fed and Chairman Powell, start weakening, and that even adds more pressure. So, recession is still something that's in front of us. And if we do see that value come out of those markets, how does that play in the commodities in the short term will be a big key. Again, still something that keeps me cautious. So if there's still good value there, those puts aren't expensive. Just at least make sure you got some type of safety valve under all of these markets.
John, if producers need some advice, want to navigate the markets with you there at Total Farm Marketing, I know it's very easy to do that. How can they get a hold of you?
Sure, love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget about our website, totalfarmmarketing.com. Again, like I always say, a lot of great information that's out there for producers to go take advantage of.
And again, that website, totalfarmmarketing.com. With that, John Heinberg, appreciate the time. As always, thanks for joining us today, sir. Have a good one. We'll talk to you soon.
Sounds good. See you next week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.